Everybody, I'm Terry Ryder, founder of Hotspotting.com.au. Welcome to today's special webinar event, which speaks to the essence of smart property investment strategies, looking for opportunities when markets are not booming. Yesterday, I had a conversation with an investor who said he was sitting on the sidelines, avoiding making decisions until he read that markets were booming again. Then he would take action. And that to me is the polar opposite of a smart property investment strategy, but sadly typical of the mindset of most wannabe property investors in my experience, who are perhaps doomed to get disappointing results because essentially they're herd animals who are always behind the game. Today we're going to be talking about the opposite of that timid and unimaginative approach. We're focusing today on smart ways to get the best results by doing something very different to the herd mentality. Today, my special guest presenter is Brad Cassidy of the Kaizen way, who specialises in helping people find profitable property deals regardless of the economic cycle or the real estate cycle. Brad said to me recently, "We love it when the media is negative about property and most people are sitting on the sidelines. That's the best time to use our strategy." So Brad Cassidy, welcome. I'm very keen to hear a whole lot more about this.
Awesome. Thanks, Terry. Thanks everyone for joining. I'm just going to share my screen and just make sure that I can just get a bit of a thumbs up on if you can see my screen. Please just let us know in the chat. That would be much appreciated. And you can hear me okay. That would be awesome. Just let me know so I can get going. Oh, I can't see the messages. Okay, cool.
But I can see your screen, Brad. So if I can, okay. I see everybody else can.
All righty then, guys. So just want to do a quick check-in, and thanks, Terry, by the way. And Terry, I've been working with Terry now for a couple of years, and he's helped me, and also he comes and speaks on my stages with my tribe. And I just want to do a quick check-in. I don't know if I can't really see your responses or not, but I just want to know how many of you are already investing. Just put in the chat in IN if you're already investing, and just want to sort of get a bit of a gauge on who I'm speaking to here right now. Can I not see the chat here, guys? Or
you should be able to see the chat in front of you, or the Q&A panel.
Q&A panel. Okay. All righty then. Oh yeah. Hey guys. Hey Neil. How you doing? Good to see you on here. Oh my goodness me. Wilson. Awesome. Thanks guys. Hey Stefano. How you doing? People have seen me before. Awesome. So, okay, great, fantastic. Thank you for that. What about if you're brand new? If you've not invested yet, haven't started, just put new in the chat for me. New. That would be awesome. Thanks, Jim. Appreciate that. Julian, Johan, awesome. Excellent. So I appreciate those responses. And it's good to see some familiar faces. So actually, what I'll do is keep this chat up so I can see. Awesome. Thank you, guys. So let's make the most of this. We have got 1 hour, and holy guacamole, when I spoke to Terry about this, usually a lot of my trainings, minimum will be 2 to 3 hours. So hopefully I'm going to go fairly fast with this, but please make sure that you take a lot of notes along this. I'll do everything in my power to give you the most value out of the sessions that we've got. So all I ask you to do is please remove distractions, get focused here, have some paper and pen ready to go, and I will do everything in my power to give you everything you came for. So my goal for this session is simply this. There's 3 things. Number 1, I want to show you why there is a huge opportunity right now, and to not follow the media, all right? To not follow what they're saying. Do the absolute opposite, okay? And yes, I'm investing heavily right now. I want to show you how myself and my students that I teach are making money even in this market and fast tracking their freedom so that you can copy the same moves. And I want to share with you our proven, battle tested and proprietary processes and frameworks so that you know how to find your next profitable deal. So basically, here's what I'm going to be sharing with you. In a nutshell, I'm going to share with you a safe and profitable way in this market, so high interest rates, inflation and negativity, on how to make an extra 20, 60, 100 or even $1 million per year without taking a huge amount of risk. If that's you, if you're interested in that, just put in the chat me, M-E, so I can see who I'm talking to here. Yes, this is recorded, Neil, all good. Put in the chat me if you're interested to know how to do this, and I will get rolling with you. Hey, how you doing, Sareth? Awesome. All right, awesome. So here's what I want to say first and foremost. For those of you who saw those figures and you might be like, okay, hold on a second, you know, that all seems, you know, a bit of a smoke and mirrors type thing potentially. Let me just tell you this straight off the bat, okay? And that is this: there is no magic pill or there is no silver bullet, okay? You just can't go out and buy anything. And in fact, I really want you to understand right now that in this market, I love this market. This is something that I am very excited about. When you really understand the fundamentals and you understand how to apply some of these strategies I'm going to be talking to you about today, there is a massive opportunity right now to really set yourself up and your family up, or whatever that means to you in the future. Now, if you're wanting to, what we do at the Kaizen way is that we help people fast track. Now, to what I mean by fast tracking is that we help people to get to a freedom target much earlier than the traditional way of investing. Now, I'm not knocking traditional way of investing. What I'm saying is that if you want a faster way, if you want to go down a path that helps you get there faster, then you have to do things differently than the buy and hold strategy. There's nothing wrong with that. I have buy and hold, but what I'm sharing with you today is a way to fast track that. So just before we get any further, I just want to know, is it okay if I take the next 3 minutes to explain where I'm coming from and who you're even listening to, for those of you who don't even know me or haven't come across me before? Awesome. Thank you, Monique. Monique, I appreciate that. Awesome. So let me explain where I'm coming from. So my name is Brad Cassidy, as Terry said, and I'm the founder of a company called the Kaizen Way. What I do is I help people grow their wealth through property in a different way, not the traditional way. We do things differently, and I help people grow their income and themselves through my proprietary methods that I've developed over the years. And I have a complete system and approach that I share that is, again, not the traditional way. So if you're after the buy and hold type of style, that's not what I do, and I'm not your guy. Okay, what I am is I help people go through a different way. And this is going to be a bit different. If you've come to sessions before and you've gone different, sessions and webinars all over the place, here's what I want to share with you, right? This is different. This is not based on theory. I've been in the trenches. I have been investing for the last 19 years, and I failed my first 6 years. So, okay, I'm going to be straight out, really transparent. For those of you who know me, you know that I speak the truth. Property is not all sunshine, rainbow, Skittles, and lollipops, okay? There are definitely challenges out there if you don't know what you're doing, and I didn't know what I was doing the first 6 years. I became a successful investor first, then I started coaching and training people just purely because people were asking me how I was doing what I was doing. I've trained over 12,000 people across Australia and personally mentored over 500 in my journey so far. So this is from the trenches, from my own experience, and my methods work in all market conditions from any financial position, which means if you've got no serviceability, you've got no equity, you can still move forward, because it's never a question of resources, it's a question of resourcefulness. And sometimes that comes from knowledge, specialized skill, and specialized knowledge, which is what I'm sharing with you today. So here's what most people don't know. I'm from a small country town called Ayr. About 3,000 people who lived there, I think, at the time. Not from a wealthy family. I wasn't born under a lucky star. There's nothing special about me, okay? I didn't come from a wealthy family, so I realized that there's struggles. Like there's big struggles with finances. So I just thought to myself, I need to do something. And cut a long story short, I went out there and I became an electrician, which I'm not anymore, but I started off my whole journey as an apprentice electrician. I got introduced. I was on all these different sites, and I thought property was the way to go. So I just started buying. And I went to my accountant at the time, and they just said, Brad, what you got to do is buy as many as you can. You want to save tax. That's the main outcome. So do all negative gearing, every single one. And you just got to buy as many as you possibly can. And that's the way. And I bought 9 properties in 6 years. And this was, for those of you who are on the call here right now, if you remember, this was back before the pre-GFC. There were products called the low document and no document loans. And all you needed was a letter from your accountant, and basically the banks were going to give you money, right? Now, I bought the wrong properties in the wrong areas, under the wrong structures. So I bought them in the wrong name, and I bought I had the wrong loan structures. Everything I did wrong. So basically, cut a long story short, this is what I ended up with. I ended up in just complete meltdown. I had to fire sell down properties and basically had to start again after the first 6 years. I was negative around $200,000 in equity, so I was behind after that. And I basically had a fairly decent meltdown, to be honest with you, and physically went down, ended up in hospital, all that sort of stuff. So I wanted to share that with you because I want you to understand that I'm not going to be that type of person who speaks all about results and success and, look at me and look at this. There's the truth of it is that I actually failed really hard when I first started. And what I want to show you is how to avoid these mistakes. So is that okay? If you guys are interested not only in the success and how to make money, but also how to avoid mistakes, put in the chat, yes, please. So I know exactly that you guys are the right type of people, that you understand that this is not just all about like oh yeah, this guy's, awesome. Thanks, Luke. Appreciate it. Thanks, Johan. So for those of you who do know me, I know I can see a few familiar faces here. You'll know that this is how I do what I do. I'm vulnerable. I share the truth, but because it's what happens. So for those of you who don't know me that well, actually, can you just put in the chat, who here has seen me speak before on or been coaching or some sort of training with me before? Just put in the chat if you've seen me before or you've heard of me before. Hey, Helen, how you doing? Yes. Hey, Lena, how are you? Awesome. Yes, Helen, this is about what I'm going to be sharing with you is about how to add value to properties, all right? But I'll get to that in a moment. But for those of you who don't know me, I'm not a slick salesperson. I'm not going to try and just, put a shiny brochure in front of you to say, buy this property. I don't, sit back and to burn money up. This is not me. I want you to relax, okay? I'm not going to try and just flick you a property and sell you something and make big fat commissions. There's no hidden agendas here. What I do is I offer training and education. I don't sell properties. That's not what I do. I'm not a buyer's agent. Nothing against buyer's agents. That's just not what I do. So please relax. I offer education and coaching. And if you feel like I'm a worthy mentor and trainer from today, then there will be an opportunity where you might want to take me up or not. There's no force. There's no either way, there's no bad blood. What I'm here to show you is how to go about finding profitable deals in any market. And that's my main outcome here. Okay. So please remove distractions, relax. I'm not going to try and sell you a property. I'm going to show you different ways. And not only just myself, I've got case studies to show you what my students are doing right now. Yes, in this market, making money. And some of those figures I showed you before, you'll see in a moment. So I'm going to show you case studies as well, real case studies from real people right now today on what's working. Okay. So let's do this. The first thing I want to do is I'm going to unshare my screen right now. And I just want to quickly show you a model that I've created that actually encapsulates everything here about how to go about positioning yourself in any market condition and making money. So can you guys see this okay?
Yep, we can see it.
Yep. Awesome. Thanks, Terry. So guys, if you've got a piece of paper handy right now, please draw a triangle out in front of you. And here's what I want you to do. I'm going to do this really quick exercise, and I want you to really think about how you are in each of these, because what I've learned out of losing a lot of money and then making a lot and building a profitable and safe portfolio, this is what I've learned. And it's taken me almost 2 decades of in the trenches, making mistakes, and then learning how to do it properly. So the first one I want you to write is this: foundations. Now that's not sexy, I know. It's like, oh my God, Brad, show me this here is the most underestimated part of the whole entire process, right? I'm going to go through these one by one. The next one is, please put in the word growth, right? And on the other side, put in the word income. Now, these are the 3 main pillars for producing a sustainable, profitable portfolio that will produce you that freedom that you're looking for. And here's how you can fast track it, okay? So for me, my target when I work with anyone is to get there in 5 years. And we want to aim for that freedom. Now, freedom can mean whatever it is to you, whether it's you want to buy whatever Lamborghini it is, or travel all around the world, or not have to work. That's up to you to choose what that is. But that's our goal. Now, you cannot buy property, buy and hold, and produce a get that result in 5 years. It's just not possible, right? Well, depends on your position. If you've got massive amounts of equity and you've got more income and equity than you can handle, then yeah, of course. But for most people in this situation, this is why you've got to do something different. You have to attack this differently. So here's what I want you to do. As I go through this, I want you to think about where you are in your journey on these. So in foundations, there are 3 things that we really need to put in place to accelerate your position in this whole entire financial fortress model. So this model is something that, again, has taken me a couple of decades to create. So the first one is clarity. You need clarity. Now, again, this is not sexy, but as a foundation, what you want to have clarity on, and I'll talk about this later, is the 3 Ps. If you don't have clarity on this, then you're going to have distraction, overwhelm, procrastination, confusion, and no confidence. Okay, I'll get to that in a moment. The next one is acquisitions. You have to have the skill set of knowing how to find deals, where to uncover the opportunities, how to go about finding the deals that are going to set you up and put you in a stronger financial position. And the other thing, and the last one on foundations, is execution. And this is where you're managing your portfolio, managing your projects when it comes to constantly looking at your metrics, your portfolio, and how to go about executing that portfolio over time. So they're the 3 main areas. Now, what I want you to do is I want you to think about actually, I'm just looking at my time here. Yeah, here's what we'll do. I want you to think about a traffic light, okay? Now, I know you might not have these colors in your with you right now, but there's obviously a traffic light. You've got green, you've got orange or amber or whatever you want to call it. My pen is playing up here a little bit, and we have red. Okay. Now, what I want you to do, just make this GOR. Okay. Now, I'm going to ask you real quick here where you think you're at, and I just want you to mark yourself a green, orange, or red for each one of these elements here. So for clarity, I want you to mark a green, orange, or red on where you might be. For acquisitions, when I'm going to ask you this question, okay? So the first thing I'm going to say is for clarity here, do you know how to capture the right data in order to make the best decision on what the next property needs to be for your situation? Do you know how to get it, where to get it from, and who to speak to? Now, if the answer is absolutely yes, put a G in front of that. You're good. You know where to go, where to get it from, and you just put a G, right? If you're like, oh, sort of, maybe, not really, a bit of here, bit of there, then put an O because you're sort of there. But if you've got no idea on how to go about doing that to know which is the best deal to do next, then put an R. And by the way, there's no right or wrong. There's no judgment. This is just to get you an understanding of where there could be opportunities for you to close the gap. That is it. So for acquisitions, the question I've got, so put a green, orange, or red against clarity. So for acquisitions, the question I have for you is, do you have a repeatable and proven step-by-step process to follow in order to find the most profitable properties in any market condition? So that's in acquisitions. So put a G for green, if that's you, if you know exactly, you've got a step-by-step process. Put a orange if you're not sure, sort of, can a little bit, or put a red if you've got, if that's something that you don't know how to do. And there's no right or wrong. It's just that's just what the reality is right now. Now for execution, again, put a green, orange, or red there. Do you have the right knowledge and team to have the right safe lending structures, asset protection, tax efficiencies, all those things, and management tools for your portfolio? So if you've got that in place and it's all good, put a green. If it's not, if it's sort of half and half, put an orange. But if it really needs work, put a red. Okay. All right, let's keep moving on growth. Now, there are 3 accelerators on growth as well. There is natural growth, right? Now, this is where the market is growing. So this is obviously where a lot of the information that I invest in with Terry, and also when I have Terry come and speak to all my mastermind members, that we really are focusing in on where are these growth spots and what's going on, and looking at leading indicators like number of sales and the trends of those, and the stock availability and listings and days on market and all those sort of great things. So that's That's understanding all of that. So if you know how to go about finding the natural growth and how to identify those spots and understand what types of properties and areas will perform well and above average over time, and know what those indicators, information, and insights are, put a green. Put a G for green if you know that, which is great. Put an O for orange if you sort of know, or put an R for red if you don't really understand or where to go. You can't see my screen. Okay. Oh, you're only getting a small screen. Okay. Let me just keep moving. With the second one here, this is accelerate. Oops. This is accelerated growth. Okay. Now, accelerated growth is, I want you to answer this question for yourself and mark yourself a green, orange, or red on this one. So accelerated growth is really, do you have the knowledge, the skills, and the tools in order to add growth and value to the property so that you can control the profits and not rely on the market, irrespective of what the market is doing? So if you know how to do that, you've got the knowledge and the skill and the process, put a green. If you sort of heard about it and maybe some subdivision development or what's going on there, it's a bit of an orange. Or if you really don't know where to start or what is possible, then it's red. Okay, so green, orange, or red. And the last one here is creative. Now, I'm going to show you some examples of this today, of accelerated growth, of creative, because creative is another accelerator. And the question I have for you here to think about is, are you aware of how to move forward and make money from property without needing to use any of your own money? Okay. Green is yes, you're aware of it, you know the structures, you know how to do it, you know how to find it, you know how to present it, you know how to profit from it. Orange is like, I've heard about it, but yeah, not really too sure. Red is like, is that even possible? You know, is that even, I'm going to show you some examples today about that as well. Now, let's go to the last one. And I am going fast, but I want to get as much value as possible for you today and show you how this all fits together and works. So in income, hopefully you can read my writing here. So this one is immediate. Immediate income, right? Now, put a green if the question I have for you here is, do you know how to evaluate and find the type of properties that produce you income from day one, and do that from a cash flow, real cash analysis, not relying on depreciations or tax benefits, or making sure that you include things like opportunity costs on things that you're putting into the deal that has a cost to it. If you know how to do that properly, it's a green, right? Great, fantastic. If you're sort of not really too sure how to do a cash flow analysis on a property, then it's orange, and red would be, well, I'm not too sure, don't know where to start. How do I do that? Okay, again, no right or wrong. Please put a green, orange, or red on that one. Now, this one here is called activated income. I'll show you some examples of this today so you understand what I'm talking about. Activated income is this. Put a green, orange, or red here if, do you have the knowledge, the skills, and the tools in order to create and add more income from a property and turn it either from a negative cash flow property to a positive, or from maybe a neutral or slightly positive to a extremely positive cash flow property? And that is adding something to the property. That's doing something active to the property. That's an active strategy. So green would be yes, orange would be sort of, and red would be no idea about that. Is that even possible? Okay, no right or wrong. And the last one is, this is called what I call in the business. And this is what I teach my students as well, in the business of property. Now, what I mean by this is sorry, my writing is pretty messy, right? But in the business of property means that the question I have for you here to mark yourself is, do you know how to generate multiple streams of income from the property industry, which doesn't necessarily mean that you've acquired a property or it's come directly from the rents of a property, but do you understand how to create other income streams from the property industry in order to fast track your generation of income? Now, green would be yes, you know how to do that. And for some of you on this call here, I know who you are and you've trained with me before, you will say, yes, I know that. You're green. Orange would be like, well, I've heard of different things, but I'm not really too sure what you're talking about. Red would be like, what are you even talking about, Brad? Like, how do you do that, right? There's no right or wrong. Now, what you've done here, and I've done this in a very in a very fast track way. What you've now basically got, and I'm not going to be doing it in the, you would have got R, O, or G, but just, red, orange, or green. But you would have had some things that maybe, you might have a red over here. You might have a green over here, or you have a green here, or you have an orange here, or here, and it doesn't matter. What you've just done then is really had a good look at it's basically a scan now of what I've learned, what it's taken in order for me to fast track my portfolio, because this is exactly what I doubled down on. When I lost in my first 6 years, I'm just going to come back to this now. In my first 6 years of investing, when I lost everything and went backwards, this is what I had to put together from all sorts of different, learning and experience, and just understanding how to fast track it. Because from that point of when I, after the first 6 years, it took me 4.5 years to then, well, quote unquote, retire, but leave my full-time paid employment. And so I went out there and I applied all these things. But the biggest thing that I would say here is just to understand where the gaps are, where the reds and oranges are, and double down on your strengths, which is great. But the reds and oranges are really just to help you just bring more awareness to what are some of the potentially missing pieces in order for you to really fast track. Okay. So I'm just going to go back to my slides. Oops, that was the wrong button. Okay. So before all that, and you probably, some of you might have heard of this before as well. I was told that you can't lose in property. So this is something that I was told when I first started, and that it's the best asset to invest in. Okay, can you guys see my screen okay? Can you just put in the chat if you can see my screen okay to make sure? So this is what I was told. And you can see that prices grow over time and all that sort of stuff. And yes, it's all the best asset class, but have a look at the ATO stats. You can see that this is what I've dug out of the ATO, that only, if you can look at this, the 71% of all investors only own one property. This is from the ATO. And then it drops down to 18.8% own 2, 3, 4, and it drops right down. So around 90% only own 1 or 2 properties in their whole entire journey, right? Now, that's a big thing. What does all this mean? It means that most investors are doing it wrong. Most investors follow the herd and listen to the media, and most investors are not educated. So let me show you some examples here. So this is Andre. He came to me not knowing a thing about how to find profitable deals in any market, and he's gone on to make $300,000 profit on these deals, and he just replicated this over and over and over again. And this is through accelerated growth strategies that I took you through before. This is Mark and Sue. Some of you might have known about these guys or seen them before around. Mark and Sue come and train with me, and they've got a 6-figure plus positive cash flow portfolio using activated income strategies. This is Neil. Neil, you're on here. How you doing, man? So Neil's on the call here right now, and these are the deals that he's been working with me for a few years now. And this is $51,000, but this is conservative, and Neil's done another one since I've done this, and these numbers are a little bit low. I know they're a lot higher right now. But I just want to show you some examples of what's possible. So it's not just like, well, okay, it's all well and good, Brad, you're telling me this, but does it actually work? And these are in all market conditions. So if they can do it, you can too. So here's what I want to do. I want to just give you some of my tips around the biggest mistakes so that you can avoid. I don't want you losing hundreds of thousands of dollars like I did. And then I'm going to show you my acquisition acceleration funnel, which is basically how you go about finding these profitable deals. Now, we've only got an hour together today. There's no way I can possibly show you absolutely everything about how to do it, but I'm going to give you the frameworks and the models so you can follow it and give you that understanding about the process that we follow, and so that you can follow it yourself. So here's the biggest mistakes, okay? The 4 biggest ones are this: not having clarity, buying the wrong type of properties, don't know the highest value skill in property investing to fast track their position, and listening to bad or wrong advice. Now, this is something that obviously Terry is very passionate about as well, and so am I, but there is so much misinformation out there that this is causing people to sit on the sidelines. And this is where I want people to take control of their financial future and be in the driver's seat. So again, this is why I'm so passionate about what we do. We train investors. I'm going to give you an example of Vicky right now. This is in today's market. So if you're wanting to create positive cash flow, this is a strategy that you can do. So she did a partial liquidation strategy. This is in a really good growth market. This is in Northern New South Wales. And she did accelerated growth strategy to profit over 660,000. She did a partial liquidation strategy to create a $23,000 positive cash flow coming in every year after all expenses. Malcolm, this is in Southeast Queensland. He's doing an accelerated growth strategy in this is right now. I think he's getting ready to sell next week or in 2 weeks' time, $62,000, right? Hasn't taken all year to do, but this is happening right now. I want to show you Emily. The reason why I want to show you this is because she's used creative deals. No money in these deals of her own, through COVID, had no job, and she still makes profits. So this is what I really love about what we do. So Emily from there was able to then buy her own home, but she's doing it in a way that still adds value and adds profit. So again, I'm just trying to show you guys, if you haven't heard of me before, you haven't been around, or you don't know, I want to show you that this is real. This is not just fluff or theory. This is happening right now with real people. These were my first 2 deals to get me back on track. I made a $100,000 profit there and $180,000 profit. Again, this was with none of my own money. It was creative. This took me 9 months from when I had that first 6 years of failure to get back on track, to pay things out and get moving again. So put in the chat, what do you think the highest value skill in property investing is? What do you think it is? I'd love to hear from you. Put it in the chat or the Q&A thing. Thanks, Andrew. I appreciate you. What do you think it is? Oh, good one. Yep. Thanks, Helen. Negotiation is a big part of what it is. But here's what I'll say. I'm just going to fast track this for you because I want to make sure I get as much as I can out. And I am going fast. So I appreciate you guys hanging in there with me. Finding money-making properties. All right. AKA acquisitions. If you do not understand this skill, then this is something that nothing happens without this, right? So how do you find money-making property deals the fastest and easiest way possible? Learning this valuable skill is like following a recipe. You need a process, you need a method, and you need the right ingredients. And we call this deal recipes. Now, I'm going to share my screen and show you how we actually do this using my acquisition acceleration funnel. So I'm just going to unshare my screen. I'm going to take you through this. Please take some notes. This is a process that's been proven, tested, measured, and it works. Okay. So let me just, hopefully you can see that. It might be small, but hopefully you can see it. Can you just put in the Q&A chat for me, please, if you can see that? Awesome, Johan. I love it. Identifying profitable properties. Absolutely. Thank you. Sourcing property. Ah, I can see some. There you go. Thanks, guys. I can see this. Okay. Can you see this okay? Awesome. Thanks, Johan. Appreciate it. So here's what I want you to understand, that this has taken me years to put together. Okay. So I know I'm not going to completely change your life right now in the next 10 minutes, but just giving you this understanding will put you ahead of most people. So here's the situation. Down the side here, we have broad to detail. So what I mean by broad is that you fill the top of the funnel with broad, sort of bigger chunks of data and information. And then as you go down the funnel, you get more detailed and specific. You don't want to get detailed and specific at the top. You'll get overwhelmed and you won't know where to go and what to start or what even works. The first thing we've got to do here, guys, is we've got to actually select our area. So it's area selection, right? And we do that. Now you can use a lot of Terry stuff as well to help with that. But really what we're talking about here is we're talking about LGA. LGA stands for local government area. Okay. Now, what we do here is we really need to make sure that this is why it's very important to get clear on your clarity is important. And the 3 Ps is your position, your profile, and your property. When you're clear on those, you will take action. Okay. Now, when you're clear on those position and profile, you'll understand what your maximum price point is. Now, you have, before you even start looking, you've got to sort of understand what that is. And you also want to know what the fundamentals are of that area. Now, the area at this level is LGA, which is your local government area. And the reason why we have taught and the reason why I do this in my own personal investing is because it helps me to really start to get focused in on a territory without going, where do I start in Australia? Because it's big, it's overwhelming. So I start with a local government area, but I do my research and make sure I can afford to get in there. I do the fundamental research on that area to make sure it's got strong population economics, right? We teach our students how to do that really, really fast as well. And then you just got to consider the whole area, right? So that's all you're really doing. It's very high level. It's not very detailed. Now, if that gives you the tick and you're happy with all that, and we've got parameters that we have, and we've got toll gates that we've got to get through to go to the next level, then the next level down is what we call strategy research. Now, depending on the strategy, whether it's subdivision or renovation or development and, or whatever it might be, there are going to be slightly different things you need to apply here based on that strategy. But here's what you need to apply no matter what, regardless of what strategy. By the way, when you do a deal recipe, I should have said this at the start, but you have to know what strategy you want to be doing first before you go down this funnel. So you have to pick that based on your position and your profile. Now, when I say position and profile, I mean your risk tolerance, your time availability, your experience that you've got, the access to capital that you have. It's all going to be depending and aligning that to the strategy that's going to be best suited to you is really important. Okay. So that's where you've got to know what that is. Then you go through this. Okay. So when you're going through area selection, you're doing that through the lens of the strategy that you're going to execute. Now, with strategy research, here's what is really important. Okay. Super important here is that you've got to understand the attributes. Now, what I mean by attributes for your strategy is you've got to understand what is required for you to complete this strategy. So you've got to learn and understand, okay, what block size do I need? What frontage do I need? Or what zone do I need? Or what attributes of bedrooms and bathrooms do I need? What slope do I need to be mindful of, right? Now, this is all learnable. It's all repeatable. It's a process you follow, but this is the outcome. You have to know that, right? The attributes. You also need to know cost estimates at this level. There's no use getting costs when you go all the way down the bottom because we want to evaluate the profit potentiality to find this in a sideways market. I love doing these types of deals. I make my most money in markets that are stale and not going anywhere. Now, I'm not just saying in any market, you have to have some good fundamentals to it, but in a boom market, you're just fighting against people. There's just a lot more people, around. Now, this still works in a boom market, but knowing this sort of process will help you even when markets aren't moving. Okay. That's why I love what we do. Okay. Now, when you look at the cost estimates here and you're getting that at this level, you're not really looking at a property site per se. By the way, just so you know, you're not rushing out to realestate.com.au and looking at properties until you get right down the bottom here. And this is the mistakes that most people make when they're trying to learn this style. They rush to a property and then they try and figure out if it's profitable. No, you go through a process of elimination through this funnel so that what you're left with, is going to be profitable. There's a difference. There is one way is getting overwhelmed and not knowing and making a mistake. Another way is using a step-by-step process of elimination so that what you're left with is the profitable deals. Please make sure you remember this, what I'm about to say, and write this down. Successful deal finding is about effective elimination. Okay, effective elimination. That's what it is. You have to learn how to effectively eliminate. That's all it is. people think, oh, I need all this, I need more, I need to go all around Australia because I don't want to miss out. No, you're going to get overwhelmed and you're not going to do anything. Trust me, I've been coaching for the last 10 years and I understand what people go through. And this is why I've developed these systems and models so that people can go and get into momentum and take action. Okay. So when you go down and you tick that box and you're like, yep, I've got my cost estimates and I know my requirements, right? You go down to the next stage, which is what we call suburb evaluation. This is now where we start to look at the suburb and we start to look at, is this suburb actually going to yield a profitable or not? So what we need to do there is we need to understand comparable sales, right? We need to understand, well, what is our end product that we're looking at doing, whether it's, you know, a subdivision, townhouses, renovation, whatever it is, what is that worth here, right? And then we need to do comparable sales also on the raw site. Now, what I mean by raw site is when you're buying the property that you're going to like add value to or add income to, that's the raw site. Does that make sense? So you're buying it. What you also want to do here at suburb evaluation is you want to look at what we call stock availability, because if there's no available stock of what you need at the price point you need it at, then you're wasting your time. You got to go back to strategy research. So there's toll gates here. So then what we do here is we do an evaluation here and we evaluate profit potential at this level. This is when we start to pull together, and we've got templates on this, feasibilities. We've got everything here to help do this. We've got a lot of done for you checklists and templates, all that sort of stuff. But basically, it's just a feasibility. If you've heard of that term before, it's really just a feaso or feasibility to help you sort of go, is this area worth more of my time or not? Is it got any profit potential that I'm happy with or not? Okay, that's pretty much what we're doing here. And that's all you need to be doing at this level. And if there is, then we go down the funnel. Does that make sense? If there's not, then we go sideways. We find another suburb, okay? And then we keep failing forward fast. That's what we do. So the next level down is what I call suburb expert. Now, if you get to this level, that means there's profit potential in the suburb for the strategy that you've chosen, which is great, right? Now, this is where you really want to get to a locals level of knowledge. You want to know locals, which is street by street. You want to talk to the agents. You want to understand, why is this property selling for more here and not there, and really get a good locals level of knowledge. But you also want to get a good understanding of supply and demand, right? And this is where a lot of Terry stuff comes in as well, that we leverage off. Is a lot of research. There's a lot of reports. When you get to this level that you can get access to. And we've also got our own software system that we use as well to help get data and information. But you're really wanting to do here is establish the supply and demand for your end product, because we're doing something. Remember, we're taking a property and we're converting it into something else. So we want to establish that there's enough demand for this, because the last thing we want to do is, you know, build a property or do a subdivision or knock down, rebuild or whatever strategy, and no one wants it. Even though the numbers might stack up on paper, there has to be a demand and you need to prove that up, right? We've got ways to do that and how we go about doing that. But the next stage after this, once you've done that, you've got the locals level of knowledge in the suburb, you've done a suburb snapshot. So suburb snapshot, which is basically what we call snapshot, sorry, my writing. This is really going to all of the level of detail with days on market for that particular product, number of sales. We're looking at the stock availability, the listings. We're looking at auction clearance rates. All of these detailed level of data come in only after we've proven profit. Otherwise, you will get frustrated and waste your time. Okay, so then the next thing is what we call AIM. Now, AIM, well, I'll do a new different color. Hold on. I'll do a different color. AIM. Now, AIM stands for Acquisition Information Memorandum. That's what it stands for. Now, we have a document. It's not sexy. It doesn't need to be sexy. It's just really understanding what are the ingredients. Like I said, this is like a recipe. You need to know ingredients, which basically means this, ingredients. Hopefully that's spelled right, ingredients. it basically is giving you a list of criteria that you know what you need to buy it for. You've done the research, so you know that you're looking for a specific type of property that's got these attributes, right? You're really clear on it. You need to only pay this much, no more. And you know that these streets and this street and that, you already got all that information and you're putting it in on one page. And the reason why we teach our students to do this is because we don't just tell students to focus on one suburb. Once you've got your AIM document and you know what ingredients work for that suburb, you might be waiting a little bit until the property comes up and you might be negotiating. It's like what Helen said before, negotiation is a part of this. But we want to be moving and getting another suburb to analyze and evaluate. So we want to have multiple suburbs at once, and it can get confusing. So when we have an AIM document for that suburb, we know we can look at that one pager and we can get really clear on, okay, this is what's going to work. I remember what I've done. I know what research I've done. I know what I need to buy it for. And you've got that information. Does that make sense? So that's where we want to get to. And when you get to the AIM, this is where you can then start to source suitable sites. And we do that on market strategies and off market strategies. Okay. Holy moly, 116. Okay. I'll fast track this. So AIM is really getting you to a position of clarity so that you know exactly what to buy, where to buy, what not to buy, so that when you get that, you can start to then have that clarity, because when you're clear and you're talking to real estate agents or even buyer's agents, right? Or you're using off-market strategies, you know, I need this property with this attributes, I need to pay no more than this, and I need to avoid this street, and this is what I'm looking for. With that level of clarity, you can really start to fast track the sourcing sites so much quicker, right? Now, what I would say is this: once you get to this point, I want you to make sure that this is your work that you've done. Protect this, right? Don't just hand this out willy-nilly, but you want to use that to help direct people to help you find them, with whether they're agents or you're doing off-market strategies. You want to do that, okay? So let me go back to my camera here. I want to go back to my screen. I'm going to wrap this up as quick as I possibly can. I hope you guys are enjoying this. Like I said, holy moly, it's been a challenge for me to do this in 1 hour to try and... So this is our Kaizen Deal Finder Pro. This is what we use. Now, this is our own software that we use to help us find profitable deals. It fast tracks it. It makes it easier. You still need to understand the process. You still need to have a deal recipe, which is what I showed you, that funnel. But this is going to help you. And this has got... The way that we do things is a little bit different. So this is not like a typical RP Data or Core Logic or Price Finder or all those other ones that are out there, even though it does those things in comparable sales, but it does it with the view of the accelerated growth strategy. So you've got all the planning information, development applications, you've got on-market strategies, off-market strategies on how to search for properties. So we have this as a tool to help you and help our students by executing this funnel. Does that make sense? You don't need it. It just makes it makes it easier and quicker to find the profitable deals, and it gives it an advantage because it's been built by investors and developers for investors and developers. It's not for real estate agents. I'm not knocking Core Logic or anything like that. They're still great, but they've been built specifically for real estate agents, right? This has been built specifically for people finding profitable deals, investors and developers. Okay. So what about inflation and interest rates? If you've been around Terry for a while now, you probably would have heard him speak about this a lot. So we have a much bigger problem than inflation and interest rates. I'm not discounting that at all. Trust me, I understand that, interest rates that go up, they affect a lot of people's cost of living pressures and all that sort of stuff. I'm not discounting that at all. But I think there is a bigger problem that we have in this country than inflation or interest rates. And I'll get to that in a moment. I like to follow this guy. His name's Simon from Propertyology, and he's actually shown this is the real facts and figures of interest rates. So this is standard variable rate and inflation and what's happened with house prices through that. So what I want you to just understand, if nothing else out of today, is I want you to just to know that, don't get confused by what the media is telling you and these headlines like CBA come out and you have, AMP economic people coming out saying they're going to be dropping by 30 or 15%. By the way, if you look at what's happening right now, a lot of them have done a backflip. So Commonwealth Bank have come out and they've now readjusted their forecast. Oh, we're not actually going to say that property prices are going to drop by 15% anymore. Actually, they're going to grow by 3% this year. And then they're going to get even stronger next year. So look, what I'm trying to say is that look at the data, look at the real facts and figures. But this is what I believe is really affecting the markets now. It's confidence. This is I get this information from ANZ Roy Morgan now, because I find that these guys are the best to track it. Now, I believe that this is the reason why we are seeing the biggest effects in the market and the softening. But I also believe that this confidence is starting to come back. And this is why this is a massive opportunity to really act now. People are on the sidelines. People are waiting. If you've heard of Warren Buffett, he says, be fearful when others are greedy and be greedy when others are fearful. Like, I've always done counter-cyclical investing. And I lost money in a boom because I did the wrong property with the wrong structures and the wrong strategy and in the wrong loan structures and entities, right? Now, that might sound funny, but it's true. And I made my most amount of money when the market wasn't really doing too much, or there was people that was scared, or there was lack of confidence in what was going on. But here's what this all means, guys. Right now, there is a window of opportunity where most people are fearful. And if you don't know how to find profitable deals, if you do know, you'll absolutely crush it this year and next, I believe. So my personal outlook is this: once confidence returns, and it's coming, the market will respond and respond hard. And why do I say this? Because the biggest danger, and the biggest danger I believe to watch out for, is not inflation or interest rates. For this country, when it comes to property, it is shortage. We have a huge crisis on our hands. And I'm not discounting the fact that this is, I'm not saying this is I'm going to, use this as a massive opportunity to take advantage. No, we have a huge problem that investors and private investors, we need to help out and fix. So here's 4 reasons to act now, I believe. Supply, demand. We have a massively awesome balance sheet. Have a look at the property it's worth. The balance sheet, the LVR of what the property values, residential properties are worth versus the debt against it is super low. It's the loan to value ratio. So we're very strong and we have a global focus on Australia. So here's the reality. Vacancies are low, shortage of listings, developers deferring big projects. You can research this yourself, guys. The board, oh my God, if you've seen the budget, oh my goodness me. So there's been some crazy numbers mentioned about immigrants and students coming in, like up to the tune of 700,000 more people if they hit, that potentially within the next, by the end of next year. Like, that's nuts. Right? That was just recently, last night, but before that, there was like 500,000 students and 195,000 immigrants that they want to open up to help with job shortages. But where are they going to live? What are they going to do? Where are they going to go? We're already at almost crisis levels of vacancies. Okay. So anyway, I get passionate about this, but all I want to say is that there is an opportunity. There is a massive, massive fundamental flaw under the real estate, residential real estate, and that is a simple equation of economic supply and demand. And we do not have enough supply. You can research the Master Builders Association, you can research the Housing Institute Association, and you will see that they're also saying that we are not keeping up with the demand of the dwellings that we need. Okay, so anyone can do this. All right, it's just following a process and helping along the way. This is Michelle. She's a single mum. And she's busy, she works full-time, and she's doing this on the side. This is a subdivision project that she'll make about $80,000, right? It'll take her about 12 months, but how much would that make a difference? And even in her shoes, as busy as she is as a single mum, this is Sybil. This is her family, and she's learned accelerated growth strategies from us. And I'm just going to fast track this to show you. She's done this. This is a townhouse development. She's done an equity uplift of over $1 million. And this was in New South Wales. Michelle's in WA. So people are all over the place, right? It works anywhere. This is Tyler, and they're in North Queensland, and use accelerated growth strategies. And once this is completed, it'll be about $150,000 profit. Okay. I could show you case study after case study after case study, but we are running low of time. So here's what I want to do. For those of you who've got time for questions, but if you do, if you want to email me, at brad@bradcassidy.com.au. If you've got any questions about what I've delivered for you today, I'd be happy to answer them.
Okay, Brad. You went a million miles an hour and you almost got it done in 60 minutes.
I did go a million miles an hour, but Terry gave me a big challenge. Brad, I love what you do. He's been to my events. He wanted me to do it. And then he said, but you've only got 60 minutes. I'm like, oh my goodness me. So anyway, I hope that you guys got a lot of value out of today.
Okay. Thanks, Brad. I think you've given people a really good taste of what you can offer. And if anybody wants to go a step further, continue the conversation. The link is there in both the chat box and the Q&A panel. And I'd urge people to follow up. Like I was really interested to hear what you had to say, to learn more about your processes. I think I was agreeing with pretty much everything you said. A lot of similarities between the way we think and the way you think about what makes effective property investment. And I think the biggest single word of all that I agreed the most with was shortage. It's all about shortage. And last night we saw the federal budget from the Federal Treasury, and there is nothing in there that deals with the fundamental problems about shelter in Australia. Chronic shortage of rental properties, high escalating rents, housing affordability problem, and builders going broke every week. Nothing to deal with any of those issues. So it's going to get worse before it gets better in terms of the viewpoint of tenants. So it adds up to opportunity for property investors. Thanks for presenting today. I hope people will follow the link that's in the Q&A panel or in the chat box and find out a little bit more about how you can accelerate the process of profiting from property investment with Brad and his team. Thanks, Brad. We'll do it again later in the year.
We will. Appreciate everyone. Thanks for your time. I hope you got some value. Take care. Bye for now.
Okay, bye.